In this lesson, we will look at the balance sheet in more detail and also analyze assets, liabilities, and shareholders' equity in greater detail. Now, the balance sheet or the statement of financial position provides useful information for assessing future cash flows, liquidity, and long-term solvency. Note that the balance sheet depicts the accounting equation, which is assets equals liabilities and shareholders' equity. We will begin with the assets section as we examine the balance sheet in more detail. Note that assets are probable future economic benefits obtained or controlled by a particular company as a result of past transactions or events. Now, we can say simply that assets are economic resources of a company. Now, under assets, we have current assets, which include cash and all other assets expected to become cash or be consumed within 1 year or the operating cycle, whichever is longer. Examples of current assets are cash, accounts receivable, inventories, prepaid expenses, all of which provide future economic benefit to the company. And of course, recall that they are expected to become cash or consumed within 1 year or the operating cycle, whichever is longer. Now let's look at non-current assets. Now, non-current assets are those assets that are expected to provide benefits beyond the next year or operating cycle, whichever is longer. Examples of long-term assets or non-current assets: property, plant, and equipment, buildings, land. Other examples are long-term investments and intangible assets, such as copyrights and patents. Now, note that an intangible asset is an asset that is not physical in nature. Now, an intangible asset is only recorded on the balance sheet when it is purchased from an outside party or an external entity. Other examples of intangible assets are goodwill, trademarks, contractual agreements like royalties, leases, and franchise agreements. Let's turn our attention to liabilities. Now, liabilities are obligations of a company to transfer assets or to provide services as a result of past transactions or events. Starting off with current liabilities, we will define current liabilities as those liabilities expected to be satisfied within 1 year or the operating cycle, whichever is longer. Examples of current liabilities: we have accounts payable, which generally represents amounts owed to suppliers. We also have interest payable, That is interest expense incurred but not paid. We have unearned or deferred revenues, which you recall represents an obligation on the company to provide future services or transfer goods in the future. Other examples of current liabilities are short-term notes payable. That is short-term debt that will be due in 1 year or the operating cycle, whichever is longer.